Welcome, everybody. Thanks for joining us. It is Tuesday, June the 12th. This is our monthly supply and demand webinar. And this month we are joined by Howard Kathol, a broker with our Yankton, South Dakota office. I am Brian Hoops with Midwest Market Solutions. And once again, thanks for joining us here. And hello, Howard. Good to talk with you.
Hello, Brian. How are you?
Hey, I am great. We had kind of exciting news from the government today. Had strong markets, corn up about 9 cents, wheat 18 to 20 higher, beans ended higher as well. We're going to talk about the report today and what producers can be thinking about as far as marketing. And I love having you on because it gives us a unique perspective, because not only are you a broker in our Yankton office, but you also are a farmer, and so you have a great perspective for a lot of our listeners out there.
Sure. No, appreciate that. That's exactly right. Been brokering since '04, but been farming since '93. So I think that I bring a little bit different aspect than a broker could by knowing inputs, things like that, what's going on in the farms, how much water and things like that a guy needs during the course of a good production year, and the lack of, and what that may detail on your crop going forward. So appreciate being here and talking.
So, listeners out there, if you're looking for someone who shares your idea of production agriculture, has great marketing ideas, and really utilizes option strategies and hedging strategies to a T, you want to contact Howard in our Yankton office. You can reach him through our website. You can find out his email. Howard's also on Twitter, and has got his phone that you can reach him at. So he's a great person to hook up with if you're looking at doing any type of hedging with option type strategies. Howard's a great guy. So want to thank Howard again for being on. We're going to talk marketing strategies in here. A little bit about our company. We've been around since 2002. We have 12 licensed brokers, 10 different offices in many states around the country. We go all the way out to Montana on the western country, and south of Chicago, Waseca, Illinois, and a lot of offices in between Missouri, Iowa, South Dakota, North Dakota, Nebraska, and Minnesota. So, and we do clear our trades through RJ O'Brien. So we have a lot of different services available for our company, many different newsletters and commentaries, text service, Twitter feeds, as well as full and discount brokerage services. And as I mentioned, if you want someone to help you with your marketing program, Howard is the person to do that with. So contact him. Let's talk about some of the markets in here. We're going to start first with overall view of what happened with the markets today. And I think one of the key things here to look at is this corn number, this new crop corn number we want to look at. This is a pretty big surprise. I thought 1.577 billion bushels. They lowered the corn in stocks here compared to last month by over 180 million bushels. They dropped that down, and that was really kind of setting the stage here for this corn market. So 1.577 billion bushels of ending stocks. I thought pretty aggressive cut, pretty friendly number, and you compare to the average trade guess here, well below what the trade thought. So that was a standout number. The soybean number also a pretty big drop compared to the average trade guess, and down from last month. So Howard, takeaways on this as far as what you expected from what the USDA had said?
Yeah, I think the numbers, they fall in line, and most of the trade was maybe looking for a slight cut on that U.S. ending stocks, both corn and beans, due to the fact that they did increase some of the seed. They increased a little bit of the ethanol, corn used for ethanol, 50 million bushels, and then a little bit on the domestic side, I increased that another 25. But it's a cut that I think was as expected, but maybe just a little bit deeper than what the average trade guess was, and therefore got the rebound on the corn market anyways today. Soybean market, somewhat similar. I'm just pulling up that S&D as I talk here, but just a little bit less supply getting brought in, 25 million bushels coming in on the ending stocks, but a little surprised that maybe the crush wasn't a little greater, only 5 million million bushels greater on the crush side, and they left exports unchanged. I think that was a number to me that could have and maybe should have been adjusted a little higher. And I'm looking at the 18-19, the new crop ending stocks, because as we know, Argentina did take quite a hit this year on their production. That demand needs to come from somewhere. They did lower ending stocks over there, or I should say their production over there, slightly offset by the Brazilian stocks, but somewhere that inventory needs to come around, and the U.S. is sitting with the supply. I thought maybe they could have and should have maybe updated that export numbers, going from 2.290 to maybe something a little bit greater than that, but they decided to leave that unchanged. But and those are the numbers. But 385 million bushel ending stock on soybeans for next year, not really tight, but I'd call it maybe snug.
Yeah, it's definitely a step in the right direction. We dropped ending stocks for corn, for soybeans, and even wheat compared to last month, and the average trade gas on a U.S. basis in here. Another slide that we have here, we're going to look at corn in particular, and this is a lot of the numbers that we were talking about. As we look at the carry-in number, down 80 million from a month ago, that reduces our supply by the same amount. And then you look at all these demand equations. All that green means positive, means we're using more of it. Our exports, as you said, left unchanged, and that could be revised. I mean, that is a number that is, compared to a year ago, 2.3. We're 200 million less than we were a year ago, even though our weekly export sales are right in line with last year's numbers. So I think this is a number that could be changed at some point, this 2.1, and that, if that's the case, that increases this total usage even more, and would, in theory, reduce this 1.577 billion bushels.
And I think that's fair to say, Brian. We look at those numbers and we can make assumptions or different assessments on what they could be. I think USDA has taken maybe a little bit of a slow walk approach, maybe knowing that due to the crop conditions out here that they may have to increase production, and then maybe at the same token they'll come back and adjust exports, and hopefully those are still around, where the net result could be somewhere very similar to what USDA has given us here, at 1.577 billion bushels of ending stock. So kind of thinking they're slow walking this a little bit, which is fair because it's early in the growing season and early in, well, we haven't started that new 18-19 export season yet. So there's definitely some room for adjustments, both on supply and maybe again on this demand side as well.
Absolutely. When you talk about supply, we look at the number here from the USDA, did not make any changes as far as yield numbers. They're sticking with the 174. Now, they probably will make some changes as we get into July, and definitely into August there will be some changes. But as we look ahead, Howard, do you see this 174 going up or down? Last year they're at 176.6. I mean, you travel quite a bit, as well as farm and do brokerage. What do you see in the country?
Yeah, what I see and what I'm hearing from different producers throughout the 6-7 major growing states is that, number one, it seems to me like the Eastern Belt was very off to a great start, got things in early. They did that because they were low on moisture, so they were able to pound it in fairly quickly. That crop off there got off to a great start. Struggled a little bit back here in the Midwest, or the western side of the Corn Belt. Some of that got a little bit later, not too far off the pace, but bottom line, I think, is that most of the crop went in. Most of the crop is off to a very good start. Crop condition ratings clearly show that. I'm not one that maybe correlate those crop condition ratings that you see on Monday night to equal what a yield can be, because we clearly saw last year, as we were deteriorating, we all thought maybe that crop yield would be less, and in fact we come on still out raising 176.6 million bushels per acre. But this 174, given the start that this crop has, and given the moisture that it's sitting at, I think traders are looking at that number getting inched up, maybe closer to that 178 and maybe even as high as 180. But I think it's important that we watch the direction of what USDA wants to do with that yield. And if we start inching from 174 to 176 or 8 or even higher, that will be the direction. And we need to assume that maybe that would get even higher as months go along here, if in fact the weather cooperates. So I think that number is inching higher.
It's a good point that you make, to watch the direction of what the USDA has to say as far as what they do with their yield. I think, it's fair to point this out, as someone had pointed out to me today, that, right now the trade is possibly looking at 180 bushel yield instead of this 174 that the USDA came out with. And I think that may be one of the reasons why we didn't rally more than the 9 cents we did in December corn. But if you, instead of a 174 and you bump it up to 180 bushel yield and use these same demand numbers, your carryout goes to about 2 billion bushels. Now, you and I talked that we probably need to adjust this demand number a couple hundred million, but you're still looking at a carryout between 1.8 and 2, and that I think would limit the upside for corn if we have 180 bushel national yield.
Yeah, that's exactly right. That's kind of how I look at it, and we'll see. I think they'll take a stair-step approach to that yield, and we'll know much more once we get in the month of July as far as how aggressive they want to be with adjusting that yield. I think they'll be careful, but at the same token, if things continue to look like they are today, which warm temperatures, we're getting growing degree units to this corn crop, and it's been fairly well blessed with moisture. One thing I could say to that is there's definitely some areas that are significantly down on reserves, and that would be maybe some of that eastern belt, that delta area, and maybe that southeast Iowa and northeastern Missouri area, that and even some of this in the Dakotas up here, especially north of I-90, you can see they need to be spoon-fed that water to keep that yield maybe tracking that direction. So as far as USDA goes, clearly could see them guys stair-stepping that number higher. And you're right, if we pump that thing up to as high as 180 or even larger, leave demand unchanged, we can clearly see ending stocks at or above our current year-ending stock number.
The other thing that could change besides yield going forward is this here, areas of planted and harvested. At the end of this month, USDA is going to update quarterly stocks and planted harvested acreage projections. This number they're using, Howard, 80.7 million acres. Your opinion, is that going up or down in 2 weeks when the USDA comes out with that number?
Yeah, I kind of could lean maybe a few more acres. I know for a fact we got preventive corn acres back here in the Dakotas on some small area, but I think with the fast-paced start that they got out in Illinois, Indiana, and definitely in the southern half of Iowa, it usually leans that they could plant a few more acres just because of the fact that they knew the fundamentals back when they were starting to plant that crop. We knew we needed a big crop this year. And just the idea that they got such a quick start would maybe imply that maybe that eastern belt sees a few more acres. Question is the West or the Minnesota state that kind of struggled to get crop in, do they kind of offset that and leave that number unchanged? If it is higher, I look for a very slightly move up, maybe 300,000, maybe as much as 500,000 acres. Okay. Otherwise, I'd say sure, let it somewhere right at that unchanged number. 88 sounds like a good number.
Good number for you. Okay. So in your opinion, producers, from your standpoint, what should they be doing with marketing, old crop, new crop? What advice can you give? I mean, is there a percentage point where you think, as you're a farmer, where do you want to be at this point in the marketing year, effectively middle of June?
Yeah, I mean, we've seen some nice moves over the last 4 to 6 weeks on that corn market. It ratcheted up into the 420s, 430s. My bias still is I like the demand story behind the corn market. that's given us an underlying support, but we got a little overextended here. We've used some of those areas to get some cash grain marketed to the elevators or to the ethanol plants. We definitely stepped into that, and at the same token, somewhere in this, 25 to 50% of heads using puts, call spreads, or maybe outright short futures, either one. Everybody's got a different scenario and different risk tolerance, but it's that time of year where we definitely need to have had something underneath us. And we can clearly state that knowing that we've dropped 40 cents right now, but the fact is that we've been scaling into that rally. And yet I'm not completely throwing in the towel here and say we can't maybe move or get half that rally back, but producers do need to just clear their minds and make sure that they're taking advantage of some of these prices. Even at today's prices, trading close to $4 is significantly higher than we were just a short 5-6 months ago. So it's there for the taking. I think we do need to protect it, and one of the best ways to do that is a straight outright put. Let that upside wide open. As we know, we got probably 4 to 6 to 8 weeks of potential issues that could happen to this crop, but some of that nature would sure suffice the corn market right now.
That's awesome advice, Howard. If a producer's been active as far as marketing with a lot of cash sales, would you recommend any type of a call option strategy going through the rest of the growing season? Is it warranted, in my opinion? That's what I'm asking you. Is it warranted?
Yes, I think it's definitely warranted. Again, I would treat it kind of one-on-one with the producer. If a guy is sitting there and got 10-20% sold, his bigger risk is the grain that he doesn't have sold, so I'd therefore maybe not suggest anything to him. However, if there's a producer who's been much more aggressive and he's got 40, maybe 50% cash sold and maybe another 25 with some option play as far as a put strategy under him, I think this is an excellent opportunity to come in, look at some either short-dated call options or go out in the September or December, buy some call options that are maybe 20 cents above the market. Don't get crazy about paying a high price premium, but it definitely makes sense given the fact we broke 40 cents in this market, and it is only June 12th. So we've got a lot of time to change what's going on out there and to maybe add to those cash sales. But I know an option I've been working with has been in the September $4 call options. They were trading 12.5 cents today. To me, that's a fairly low risk play to take advantage of any upside that may happen over the next 2 to 4 to maybe 6 weeks. And if we can capitalize on that, then we can add those dollars earned directly to the cash sales that we made and to better enhance our bottom line for this year. So I think it's a good idea, but it does depend upon where you personally sit on cash sales made.
Oh, absolutely excellent analysis and strategy and advice, Howard. Appreciate that. Let's look over at the soybean market here and some takeaways. It maybe didn't have as much as excitement as the corn market today. We closed just a penny and a half higher, kind of fighting whether we were able to move higher or not on the day. But same thing here in the corn and the soybeans, no change in yield, but a small change in reduction of beginning stocks, 25 million bushels. Those beginning stocks combined with strong usage demand totals, crush was up 5 million, gives us a net reduction of about 30 million bushels of soybean ending stocks. And, I remember just 2-3 months ago, some of these reports, some of the analysts that were coming out were saying 700 to 900 million bushels of ending stocks for soybeans. Now USDA is talking about under 400 million. From your perspective, what does this mean for marketing going into the rest of the summer?
Yeah, I think you kind of hit it there by bringing up with some of the earlier other analysis. Our analyst guys are out there talking maybe 5, 6, even as high as 700 million bushel ending stocks. A 385 number looking at us in the face, and you can debate the numbers and acres and the demand side all over, but anything under 400, I think, in this day is considered not tight, but it's somewhat snug. And the reason I say that is because you can definitely move 50 million bushels either way on that and make it a lot more tighter or more snug, whatever term you want to use. And that may give us that opportunity to punch the market back to the upside as our growing season is all ahead of us yet on the soybean. So from a marketing standpoint there, again, it's a constructive number. However, we've been trading between 10 and 10.60 pretty much the whole first half of this year. And those were opportunities, I think, for producers to take advantage of it. We definitely had guys go out and sell probably 20, 30% of their potential cash if they got planted in this growing season. I think that's the right move. And furthermore, a few of them have advanced some additional by placing some hedges on in that 10-20, $10 put strategy. I think makes absolutely good sense. It's working currently, and I think we continue to hold that going forward until we see something different that maybe change our mind. But definitely spots, and we've had opportunity. We need to take advantage of some of those, and we did. I guess going forward now, we're kind of in that same scenario with corn. Do we debate this market to re-own some of that cash we sold? And I think the answer again there is yes. We're at a level where we dropped 90 plus cents on that November market from high to low, and it's right there giving us an opportunity to, again, individual producer who maybe didn't sell as much as a true hedger. You don't necessarily have to go after a call position because you got your whole crop in the field. That could benefit on a price rally. But for people who maybe stepped into the cash sales quite heavily, again, maybe going after a $10 call or get something in the August or a short dated option that you got 80, 90 days of time, picking something 20 cents out of the money that could give you some benefit. In fact, if we turn this thing around and started rallying. So yeah, I think you're at that juncture where hedges should be in place, and yet the opportunity to re-own is in front of us.
So we're well off of our highs. We're about 975. The highs were around 1060. What could turn us back to that 1050, 1060 area that we just fell out of bed and came from? I mean, is there a couple fundamental events that could take us back there?
Yeah, I think we got a few small things. One, the acre adjustment may not be as, we could talk about that as well, but it might not be as high as 89. Maybe it's still under 90 million bushels. That's an underlying supporting factor. Obviously, we got our whole growing season left. Things could turn hotter and drier like they did a year ago. If you remember, we lost, 2+ bushels an acre due to the dryness in August and early September of last year. So even some minor tweaks like that on a fundamental issue, we could at least keep the ending stock number in check or bring it down 50, 60, 80 million bushels, depending upon how that late July, all of August weather, and even some of that early September weather takes place. One other item I really have been watching and waiting as a year is what is some of the political debacle with Trump's tariffs on China, NAFTA with Mexico and Canada. If we could calm the waters there a little bit and maybe suggest that that tariff of $50 billion going to be hitting China here would be maybe negotiated down or off the table, and China retaliating by saying they're going to aggressively go after ag commodities, along with some of our intelligence things that we want them to quit necessarily stealing or taking from us. I think if that opens the dialogue, and if we can calm that water down, I think we can sure see a short-term pop in that market again.
Yeah, those tariffs with China go into effect in just a few days from now, and there may be, you never know, there may be an agreement right at the 11th hour before they in place, and that is something that could certainly push us to another level higher. If an agreement comes, no doubt it's going to include China buying a certain amount of soybeans, and that would be above and beyond what they have bought in any other previous year. So good analysis on soybeans. Want to look at wheat market here in the time that we have left. not a tremendous amount of changes. Wheat had the biggest moves of the day, 18 to 20 cent gains in Chicago and Kansas City. 3 cents is all in Minneapolis, far outpacing any of the other commodities. And this is the market really probably had the least fundamental change of anything. You look down here at the bottom column, ending stocks, only a 9 million bushel reduction in wheat ending stocks, not much change there. Yields, harvested data, what we know so far about the hard red winter wheat crop, it's minimal as far as harvest. They only have about 14% done, but the USDA did change it just slightly, a small increase. And I felt that the rally today had a lot to do with trade being fearful that we'd see a bigger production increase from the USDA. And I know a lot of producers out there would argue that there should not be any production increases. The wheat crop is not there, or what is there is kind of a disappointment, except in some real limited areas. And if we look at the next slide, we'll see the wheat production numbers. Not much changes really here. Average trade gas, the all winter wheat production number, just up about 14 million bushels from last month, and all wheat production, very minimal changes there. So just not much changes. Last year's all wheat crop is actually a little bit larger than a year ago, but the winter wheat is a little bit smaller. And Howard, I know South Dakota, some spring wheat, some winter wheat in that area. What are you telling your clients that you work with as far as production wise? What should they be doing with their crop?
Yeah, if you could go back one slide, Brian,
Sure.
and take a look at the S&D again, and I'll make a little bit of comment, and then we'll talk about the production up here. But I think you're right. I think the trade today was clearly looking for maybe a little bit more production. It was kind of a relief valve that 6 million bushels, still an increase, but not near the increase that maybe could have been out there. I'd almost debate that a little bit. I've got boots in the ground with my custom harvesters who are down in the Texas, Oklahoma. They're just approaching that Kansas wheat crop, and the tune I'm getting out of those guys, and they'll do 30 some thousand acres down there in the southern part of the country, and get a pretty good respect of what's going on. And the word I'm getting still today is even with the rains that we've seen late in like eastern Kansas and Oklahoma and some of that came late, it did help fill, maybe got some more protein, but the yield I'm still hearing is not near, number one, what it was a year ago, but just not as good as maybe as what they hoped. So maybe, and I noticed the state by state yields, Kansas, Oklahoma, they were pretty much left unchanged from a month ago on bushels per acre, and yet our harvesters are clearly saying that their yields they're cutting are less than what I just saw today on USDA. So maybe it's fairly muted that production isn't growing, and maybe they wanted to wait a little bit longer till they're deeper into that harvest before they take a real better stab at it. But could it be dwindled down yet? Possibly. But a number like that clearly says that we've got wheat. It's not what we had a year ago, but I should say it's a little more than we had a year ago because we got the acres. But the idea right now that producers should be hedging this wheat here, I think I'd maybe hold off. I like the idea that it's harvest season, similar to like harvest season when we're doing corn and beans. We usually should be putting in somewhat of a low. It is a world market. We do got issues in the Black Sea and a few of those other areas that produce a good chunk of wheat, especially wheat that goes for export. I'd be taking wheat that's sold off the combine and maybe going out into the December contract, looking to re-own some of that wheat as once harvest is sealed up, maybe we can get a fresh rebound on that. As far as production up here in the Dakotas, both hard red and spring, a lot of that is north of I-90. Clearly, it's been drier up there. I think their hopes of anything really large has been somewhat diminished as that wheat has passed its main reproductive stages and heading is going on right now. And it'll be a short month or so, they will be harvesting that wheat. So looking at the height of it and stuff like that, clear to me. It looks like it should be a somewhat of a okay crop, not a record crop, but we'll know once we get deeper into that, and that harvest won't happen for at least another month here. So spring wheat, same thing applied. I think they're talking in like northern South Dakota, definitely got some acres in, but stayed fairly dry for a long period of that time, and they've just received some nice rains just this last week. That's going to definitely help benefit it, but I think some of that crop has been hurt to a degree. So still in that mindset, once this grain's harvested or that wheat's harvested, come back in there, especially if you moved it to the market and let it go. Wouldn't hurt to pick up a call option in the December contract and see where that'll take us through the balance of the summer, early fall.
I think that's good advice. Thanks, Howard. Appreciate that. And thanks again for being on, Howard, with us talking about some different markets, marketing strategies, analyzing this report. And why don't you give out your phone number, Twitter handle, how people can get a hold of you?
Sure. Yes, it's Howard Kathol, phone number 605-661-0508. Email hkmmsinc@gmail.com. Twitter handle @Kathol_Howard. We'll get you to my Twitter page.
Excellent. Appreciate that. Thanks, everybody, for listening. Thanks to Howard for speaking with us today. And contact any of our offices again if you have any questions on marketing, getting your account set up, or getting a personalized hedging program established. Brian Hoops from Midwest Markets. Have a great day, everyone.